Ladies and gentlemen, welcome back to another video. As promised, I brought the legend James Seyffart. James, thank you so much for coming on. Today we're going to be discussing about the Bitcoin ETFs and the fact that 937 institutions reported that they hold the Bitcoin ETF, super unprecedented. And of course, about Ethereum and is it game over for Ethereum? So stay tuned, smash up the likes. I'll put the socials for James in the description down below. But with that said, James, thank you so much for coming on. How are you doing today?
I'm doing great. Thanks for having me. Always happy to chat with you, and let's dive into some of this stuff.
Yeah, let's get into it. I know you don't have much time, so I want to kick things off and ask you the first question that everybody's dying to know the answer for, and that is the shocking fact that 937 asset managers that have over 100 million in AUM reported that they hold Bitcoin ETF. So what are your thoughts on that? What were your initial kind of predictions with how many institutions would have bought these ETFs in Q1? And ultimately, what does that mean for the future of Bitcoin?
Yeah, so I mean, as far as the institutions go, I didn't really have a number on how many I thought would hold it. Obviously, we knew there was going to be a significant number of institutions holding this based on the fact that we've seen over $12 billion of inflows. I mean, $12 billion doesn't just come from nowhere, right? The one thing we do know is that most of the float in these things, or float in this case is the holders, a lot of it's retail. It's a lot of people in their own IRAs, their own brokerage accounts, their own platforms. They're holding it directly. They don't, it's most people that hold this don't fall into that criteria where you said over 100 million in AUM. Those are the types of people that need to file. They have to meet certain criteria and then you have to file 13F. One of them is you have to be over 100 million in AUM. Most of the holders of these things don't fit that criteria. That said, that 937 number is huge. Usually an ETF launches in the first, so they have to file these every quarter. So this is for the first quarter. So these holdings are as of March 31st, 2024. They don't have to report that until 45 days after quarter end, which is why we got them on May 15th when we have all the data. That said, there's a lot of institutions that hold this thing. Some of it is market makers, some of them are just traders, some of it is just not has nothing to do with long-term buy and hold prospects or their demand for Bitcoin, right? They're just using this as a trade. It's a short-term trade, or it's literally it could just be they're using it to trade against something else, spreads. There's a lot of complications here, and some of it are actually authorized participants and market makers of these ETFs, the people that are working behind the scenes to facilitate the ease of transaction between buys and sells, right? Stuff I talked about that stuff last time. But then there's also a lot of these independent advisors that we've seen bought significant amounts of capital here. There's a lot of hedge funds, which could be doing this as a buy and hold or a tactical allocation of Bitcoin. They could be like those market makers I was just talking about that are short term, just trading in and out. But what we do know is that typically when an ETF launches, say in January, it's very rare to see this many companies owning the ETFs. Everyone's kind of like, oh, it's just retail. That's dispelled. That is a bunch of BS now. Like no one, anyone making that argument, it's not an argument anymore. It's not just retail. Yes, it's largely retail, but we'll see over time what happens. But the fact that we see in the first quarter that number 900 or however many file for these things after the first quarter of them listing is huge. Usually it takes months before these types of institutions are going to buy into these things. So we'll get a lot more information over time. We can talk about like there's some big advisors here, but for the most part, a lot of these platforms, the wirehouses or advisor platforms, the type of things where these people who are managing other people's money, they're buying these ETFs through those platforms and through those wirehouses. A lot of the big ones, the huge banks, the UBSs, the Merrill Lynches of the world, the Raymond James. If you don't know these names, these are basically the platforms that set up all the backend infrastructure. So whoever your parent's advisor or your advisor is that's out there buying these things for you, they haven't approved these things necessarily to be bought and sold yet. So we'll see over the next probably, I don't know if we'll see it after the Q2, which will be, so that'll be June 30th, and then that won't be released until the mid-August. But I think by the time we see the Q3 reports, call that November 15th-ish range, right? So no, September 30th, I think we'll see even more numbers of advisors. Some of those big platforms I was just talking about, we'll see them buying. So this is a good start. It's a very good start. But again, it is still mostly retail, and that's kind of what we expected. There wasn't anything that was, oh my God, shocking to me in these reportings because we already knew that the money was there. We saw the interest, we see the trading, we see there's a lot of demand to hold and trade these things. And that's what the 13F showed, in my opinion.
Makes a lot of sense, man. And I want to ask you about specifically, first of all, advisor allocations and how much these institutions are actually allocating to these Bitcoin ETFs, especially in comparison to gold. Because if we go to GLD or SPDR, the GLD ETF, like when we draw the comparison in the first quarter, the Bitcoin ETFs are performing multiples of times better compared to the gold ETF. So the first question is going to be, how do you see the investor allocation? And do you think it's strong or can it grow larger in the future? And number two is about the long-term investor kind of mentality with these ETF holders. Are they like the crypto degens we have in the space, or do they tend to hold for longer amounts of pullbacks or a longer period of time in the future?
Yeah, I mean, it's going to be made up of probably the similar people that make up the spot market for these assets. For Bitcoin, for example, I'm answering your second question first. So there are people that are going to be just buying this thing and trading like a degen, like going in and out of it. There are people out there. A lot of them will be market makers, Wall Street trading firms. They're going to be trading these things heavily anytime there's mismatches in prices of these different ETFs. They'll trade them against each other, right? So that's going to happen. There's going to be people trading in and out. But for the most part, ETF holders and users tend to be way more long-term buy and hold, or at least medium-term tactical. So they might buy and hold for a few weeks or a few months. And a lot of them are going to be doing those advisors we spoke about. For the most part, the way they're going to be investing, it's similar to the way that some advisors view gold, right? So what they'll do is they have a set target allocation for their portfolio. So the basic portfolio that everyone thinks about is 60-40. So 60% equities, diversified portfolio, 40% bonds in a diversified portfolio. Some people do a little bit less, like 50-30, and then use the other percentages out there, 20% to do alternatives and higher risk things, diversifiers. Gold in many cases fits into that diversifier camp. It tends to be uncorrelated to equities. It's uncorrelated to bonds. If anything, it's inversely correlated to the dollar for the most part, but not 100%. So what they'll do is they'll put a slug of their portfolio in there just for diversification benefits. It tends to potentially increase returns and decrease risk and volatility of the portfolio, which I think a lot of people are going to view Bitcoin as well. And when I talk to advisors, a lot of the people buying this tend to be in that 1 to 3, maybe 5% range of their client portfolio. So what they're doing is say they target a 3% allocation. If they have $100 million, that means they might be putting $3 million into the Bitcoin ETFs, right? As Bitcoin runs up, they're going to sell because they want to go back to that 3% target allocation. Some of them might let it run, but for the most part, these advisors, they're going to be rebalancing. So they're going to sell as it runs up. But on the flip side, if it goes down 80%, they're going to be buying more. So it could stabilize the volatility. Those are the types of players that are most likely to use ETFs for longer term situations. The one thing that we do know, going back even to 2015, you can go back even further to Bitcoin's earlier days, there's a lot of volatility, but the volatility tends to be a feature, not a bug for that diversification alternative type investment to an advisor, right? Because what happens is like I said, you're going to be selling as it runs up and you'll be buying as it goes down. And what that does is one, it decreases the vol of the position. It also increases the performance of the portfolio and decreases the risk because it tends to not really be correlated to all that much. Lately, Bitcoin has been correlated to tech. That's kind of breaking down in some regards. But the one thing that Bitcoin is definitely correlated to, it's kind of inversely correlated to the dollar, real rates in different ways. So it'll be interesting to see how it plays out. But my theory is that I think people, for the most part, are going to be targeting a set allocation, which is similar to what they do with gold ETFs. Gold ETFs in the US have just under $100 billion in assets. Bitcoin ETFs are already halfway there. So I've been saying since at least 2017 that my view on Bitcoin is that Bitcoin is like a call option, a store value asset. Now it's not necessarily the best description because I don't think Bitcoin's going to zero. In my mind, back in 2017, I thought it could go to zero like a call option and it could go to the moon, you know? But now I think a better description my boss, Eric Balchunas, came up with, he said Bitcoin is like gold, but as a teenager, like it's still figuring itself out. It's still growing. There's a lot of volatility there. There's a lot of risk. Like if you look at a chart of the Bitcoin price and the gold price, I mean, the gold price basically looks like it's a money market fund. It looks like you're just holding onto dollars. Obviously, you're not. Gold can be very volatile itself. So That's the way I think most people are looking at it. That's the way I tend to look at it. But again, we'll know more when we see those 13F data come out. I think the third quarter 13F data will be much more representative of what the long term is going to look like.
I love what Eric said there because I mean, if you look at it, Bitcoin is just 1 year younger than me. So we're both teenagers, we're both growing together, and we're trying to figure out what we want to do with our lives. So it makes a lot of sense. But before we get into Ethereum and end this quick interview off, I want to ask you because I saw this kind of news headline pop up in late April that Morgan Stanley wants to enable 15,000 new brokers to get into the Bitcoin ETF. So from my understanding, not everybody has access to these ETFs yet. So, do you think that this access will continue growing? And when it does, more money will be flowing into the Bitcoin ETFs?
Yeah, there's undoubtedly going to be some more money coming in. How much is the question, right? So that goes to the why I was talking about the third quarter. The Morgan Stanleys of the world, the UBS of the world, the Raymond James of the world that I was talking about, those platforms, you can't just buy the ETF just because it exists doesn't mean that as an advisor on those platforms or a broker on those platforms, I can just buy it for my clients. It needs to go through a due diligence process, to kick the tires on these things, figure out what the risks are, understand who all the parties are, the custodian, who's trading it, who's the custodian of the Bitcoin, who's the custodian of the cash, how is that creation redemption process working? There's a lot of things that these big traditional financial firms, the like Morgan Stanley, like you're talking about, needs to go through before they're going to let these things be sold by their clients or by their advisors on their platform. Now, in many cases, the platforms kind of, if I'm, so let's say you're my client and I'm the advisor. I cannot go out and recommend to you, I think Bitcoin should be a 3% allocation, right? That's the way most of this works. Some of those independent advisors that we saw with that first 13F, they don't have those huge departments of risk and legal trying to figure out when and what you cannot buy, right? But in these other, the bigger TradFi firms that we're talking about here, there is that big department and they're going through all this due diligence. So I can't recommend it to you yet. That's likely not going to happen for months still. There's a whole process that goes on. Some of these places are allowing me to buy this, but only if you come to me, if I'm this pretend advisor and say, I want a certain percentage of my allocation in these Bitcoin ETFs. Then they're like, because they're in this middle ground where like it's not completely restricted. It's not like you absolutely cannot buy this, but you can buy it as long as your client comes to you and you fill out this paperwork explaining why you're buying it and how you're doing it and things like that. Eventually, we'll get to a point where some of these platforms, not all of them will possibly never, some of them will never get to the point where you can recommend it, where I, as an advisor, can recommend to you, my client, and say, like, I think you should have a 1% allocation to Bitcoin and making the arguments here and there, right? So that stuff is going to happen over the coming months. And we'll see how many advisors actually do want to put their clients in these things and how many clients are okay with their advisors putting their money into a Bitcoin ETF.
Makes sense. So all eyes are basically around the September deadline to see the next kind of wave of which
Well,
asset
there's
managers.
actually a June 30th deadline. So theoretically, if some of these platforms allow them to do this before then, that could happen. But based on what I'm hearing, it sounds like it might be a little bit longer for these massive platforms to get comfortable.
Let's switch into Ethereum. And I just wanted to mention very quickly, I saw your tweet about the SEC commissioner, and she basically said in your tweet, you mentioned that if they were asked to what would you do differently with the Bitcoin ETFs, the SEC commissioner replies, "We would not wait 10 years." And it's super funny because, if they had capitalized on this earlier on, Wall Street would have made so much more money because of how well Bitcoin has performed, historically speaking. So, do you think when it comes to Ethereum, did the SEC, did kind of Wall Street learn a lesson, seeing that these cryptos do actually have significant demand? Therefore, we should push the Ethereum ETF to also be approved, or is it the complete opposite? And do they want to wait another year until we approve an Ethereum ETF?
Yeah, so that was Hester Peirce. So one thing she said, she didn't use the word she didn't use the word we. She said I. I would not, or maybe she did use the word we, but what she's saying there is that's not the way she would have done it. So if it was up to her, we would have had Bitcoin ETFs years ago. I think by waiting 10 years, it created this whole like hullabaloo and like all this excitement around the launch and so much demand and pent up demand for the ETF. And Yeah, she just never thought that we should have been denying them from the get-go, but she's a one of a five-member commission, and she's not in charge of the commission. Gary Gensler is a Democrat, so Hester is technically a Republican. Gary Gensler is the one that makes the ultimate decisions. So there's usually two Democrats, two Republicans, and one commissioner, and that commissioner is picked by the party in charge. In this case, the Democrats are in charge, Joe Biden. Gary Gensler has the ultimate say. He's the one that basically was the swing vote in getting this approved. We still had two commissioners, that the Democratic commissioners, that did not want the Bitcoin ETFs to happen. That said, from my point of view, it doesn't look like the SEC is learning from the Bitcoin race. Gensler basically approved these things solely because he was forced to by the courts. I don't know if we'll need a court decision to get a Ethereum ETF, but we're due for a deadline in the next 7 days minimum. Theoretically, they could come today when we're recording this, but yeah, it's looking extremely unlikely that they're going to be approved. So I don't think they're going to be approved in this go around. I also don't think there's a lot of talk about the SEC calling Ethereum a security. That is smoke, obviously. Where there's smoke, there's probably fire. I do not think that the SEC is going to immediately call Ethereum a security within the next week or two in that filing. My guess is that they are going to find a different way to kind of kick the can down the road. One of those could be correlations between the futures market and the spot market of Ethereum. There's a few other avenues they could go down that basically might not really be something that a issuer will sue over, but arguments that kind of might fall apart within the next year. So if I had to put a guess, I think we do see Ethereum ETF likely in 2025. Slight chance maybe towards the end of this year, but even then, I don't think it's likely. But time will tell. And honestly, we'll have a lot more information when we get this letter next week. Like I said, I'm expecting it to be a denial order, and I will be reading through the SEC's arguments on that denial. My current theory is I think they're going to lean on correlation. Even though correlation is strong right now, it wasn't that strong 3+ years ago. And I think they're going to say we need more data to prove that this correlation is strong.
I'll just put a card at the top right hand section for everybody that missed out on the past interview because James also mentioned some pretty cool stuff about Bitcoin and Ethereum at the same time. So after this video finishes, make sure to go and watch that afterwards. But before we say goodbye to you, James, I have 1.5 question that you can go through pretty quickly, and that is what your thoughts of the election will be, and how it will impact the potential Bitcoin markets. So do you have any thoughts on that specifically?
Um, right now I mean, the recent polling has suggestions that Trump is likely to win. We're too far out for that really to have all that much meaning in my mind. Things change very quickly. Um, so it'll be interesting to watch. That said, there has been a situation where Biden and Elizabeth Warren and the Democratic Party have kind of left this opening for Trump and the Republicans to lean into the crypto space and say they are in favor of growing it smartly. They continually stressify because there is no argument. There's a lot of fraud and manipulation here. There's a lot of bad actors in this space, more broadly speaking. There's also a lot of good actors trying to do really cool stuff, democratizing finance for many different people around the world, and some cool stuff that's happening. Even if you're a U.S. citizen, there's some cool stuff happening. That said, who knows how much that'll matter? The one thing we do know is that on this current admin, he's relatively anti-crypto. He said he would veto an SAB 121 repeal, which is something that is not good for crypto in the US. And we just had a bunch of Democratic senators break from Joe Biden in his decision to saying that he's going to veto. So we'll know in the next week if whether or not he actually vetoes this thing. But it's interesting that crypto is kind of finding its way into a key topic in this race. The question is, one, how many people truly care or single issue voters on based on cryptocurrency? I think there's a lot of people that work at firms in crypto in the US that they are almost essentially a single issue voter. We'll see. But there's also plenty of other reasons why single issue voters would never vote for Trump. But so it kind of depends how many people out there in the crypto industry or just investing in crypto are single issue voters that would have normally voted for Biden. And if there is, however many of those people are, is it enough to swing the election? So I don't know how much impact this all is really going to have. Obviously, Trump decided recently that he needs to be pro and he thinks it'll give him an edge. That said, if we do get a Republican president or Republican victory in November, that is undoubtedly better for the industry more broadly than a Democratic win. And that might not necessarily mean, oh my God, this is the best thing in the world, but based on what we've seen from Elizabeth Warren and Biden's admin so far and his SEC, and the FDIC and other things, like they are not at all in favor of some of the things happening in the space. So it's basically, even if the Republicans are neutral towards the space, it's going to be better than what Biden and Democrats have done so far. So I don't know who's going to win. It'll be interesting to watch. We'll see how big of a deal this actually becomes, if it actually is meaningful in this race. But I'll obviously be watching very closely for
James,
professional and personal reasons.
thank you so much for that. I think, yeah, what you said about getting the edge with President Trump, I mean, 38.5 million people, adults, own crypto in the US, which is 15% of the total adults. So I personally think he wants to get an edge too. But before I say goodbye, I know I'm sneaking in too many questions here, but what do you think about the tokenization aspect that, BlackRock and all these other big funds want to, or big institutions want to integrate into their kind of processes because it reduces velocity of money transaction and therefore potentially improves and escalates economic growth. So do you think that these BlackRocks will use a current blockchain system already created, or will they develop their own systems?
Well, you have like JP Morgan that is internally developing their own blockchain type systems. But we've seen plenty of stuff. There's a lot of other firms. I mean, BlackRock, for example, Wisdom Tree, Franklin. What we're seeing in this space more broadly is there's two directions, right? And I think a lot of these TradFi firms or firms that are sit in the middle between TradFi and DeFi, they're building bridges in both directions, right? So these Bitcoin ETFs can be thought of as taking a traditional financial wrapper, an advanced traditional financial wrapper, which is the ETF, and they're wrapping up a digital asset, Bitcoin. So they're taking a digital DeFi asset and putting it on the traditional financial rails. But we're also seeing the reverse happen. They're taking traditional old school things like a money market fund and putting it on the DeFi rails by wrapping it and tokenizing it. And we see the same thing. Wisdom Tree is doing some of the same thing with their funds. We see other legacy asset manager issuers using the blockchain to keep track of who owns what shares. So there's a lot of stuff happening in both directions here, and I think there's going to be a lot of there's a lot of white space in the middle between DeFi and TradFi, and these TradFi issuers and also people in the DeFi world are trying to find a middle space there to help facilitate that in the most efficient way, to operate a business essentially.
Incredible. James, thank you so much for coming on the channel. Those were some incredible questions and answers from your side. So, ladies and gentlemen, thank you so much for watching. Again, make sure to go and follow James's Twitter. He's been the kind of savior, along with Eric, in this ETF kind of situation that none of us had any clue what was going on about. So, again, I want to say thank you to you once again for personally educating me and my audience. But, guys and girls, thank you so much. Have a great day, and I'll see you on the next video. Thank you, James, and bye-bye.
Thanks for having me.